Hello and welcome to the Wealth of Advice market update on the 16th of December 2020. This will be the final market update of the year. The main news stories of recent weeks has been dominated by the vaccine and how this is now starting to be administered around the world. The UK gave its first dose out last week, and then across in the US they've started issuing theirs this week. We're expecting positive news, or we're hoping for positive news from the Oxford vaccine people before Christmas, and that should give markets and asset prices a boost as well. The FTSE 100 hit a 9-month high on the back of this vaccine news, which I think we covered a lot in previous updates, which was good. We want that to continue. Negative news, Arcadia has gone into administration. Debenhams is probably going to close with a loss of over 12,000 jobs. Clearly not good news stories to have. However, one fund manager we spoke to explained that bad companies leaving an industry is not such a bad thing for the good companies that remain, who will become bigger and stronger. Yes, there will be job losses, and that's horrific for those people involved, especially at this time of year with everything that's gone on in 2020. But just looking at it purely from an investment point of view, Debenhams and Arcadia clearly weren't doing very well anyway, and their position in the high street or their position in the retail sales arena will be taken up by other retailers, hopefully ones that will generate good growth on your investments and portfolios in the coming months. Supermarkets have had a negative backlash, and lots of other big stores who've remained open throughout the year when the lockdowns have been happening, they've received business rates relief, and there's a backlash saying a lot of that needs to be repaired. I think it's 1.7 billion that needs to be repaired, so huge numbers involved. Brexit still looms large. We were going to record this update on Friday of last week, but we decided to delay it a few days with the announcement that there was going to be Brexit talks going on till Sunday. They have now been extended again. So on Sunday evening there was the belief that maybe a no deal was the most likely outcome. However, we've looked at the currency markets over the last few days, and you can see the pound has risen since Sunday on the hope and belief that it's only now certain small fine points that needs to be ironed out, and we could get a deal through soon. From my point of view, what's really frustrating about this is, as a business owner, I can only imagine how other businesses are dealing with this, but how are you going to react if you're running a business, if you're being told on the 20th, 27th of December that, yes, we are going to have a no deal and it's effective from January the 1st, but they're not giving people enough time to react to a potential no deal, which I think is very frustrating for lots of us, and it just creates that market uncertainty. Around the world, when we look at coronavirus and COVID-19, clearly 2020 has been the worst year for lots and lots of people for lots of reasons, brought on by the coronavirus, job losses, businesses going bust. We're now seeing in certain parts of the world coronavirus numbers going up, which we were told would happen as we got into winter. The worrying statistics coming through from places like America, where there's around about 3,000 people are dying from it every day. They're saying it's worse than a 9/11 happening every day. There should be a change of president on January the 20th. So only a few more weeks left of the Trump administration. So it's going to be interesting to see what Donald Trump decides to do over the next couple of weeks in lots of areas, not just on the coronavirus front. Will that spook the markets? Will that boost the markets? So definitely interesting times. But of all of the fund managers we've spoken to over the last couple of weeks, they are generally positive of what 2021 could provide. And that's mainly because 2020 has been such a bad year for lots of businesses for lots of reasons. Now we come to that section of the update where we look at how markets have performed. So we're now coming to the very end of 2020, just 2 weeks left of the year. The market returns that we can see here from the S&P 500, the MSCI World Index and the FTSE 100 shows a massive variation on returns. As explained lots of times this year, the American market is way ahead of everyone else. Again, mainly borne out through these technology companies who've done very well. And the FTSE 100, minus 8% over the course of the year, has been in a much worse position, even if you look there towards the end of October as we got into November, and there's been a good rally since, and we hope that's going to continue. So on the point of the UK stock market, this next graph shows how UK companies look cheap compared to other companies around the world. And I think there was a few huge big investment banks over the last couple of weeks have said they now believe the UK stock market is a clear buy because the value of our stocks are a lot lower than other stocks on stock markets around the world. Brexit being a big factor as well as the COVID-19 situation. So those clients looking at the negative performance of UK stocks and wondering why don't you just sell those? Well, they're now at a position where we really think fund managers are going to be buying into them because there's going to be some positive news stories to come in 2021. Hopefully that's the case, but we'll keep reviewing it. We'll keep an eye on it. If we need to make any changes, then obviously we'd be in touch. Throughout the year, we've shown you graphs showing how the US, the UK and the MSCI World Index have performed. Now just add a little bit more context and show you some of the other individual stock markets around the world. We've included the Nikkei, which is the Japanese index, which you can see has had a very good year. It's up 17% in 2020. The German index, one in the middle there, which is up 7.6%. So clearly the German market's done better than the UK market. Euronext, the CAC 40, is minus 14% over the same period. So the UK is definitely not the worst index that we could find. And we just want to put a bit more context out there to show you that each market over the last 12 months has performed differently for lots of different reasons. We now look at the oil price during 2020. Many years ago, I think it was President Ford in America said the price of oil would rise so much, be so inflationary that it would be very negative for markets all over the world. If you look at what happened in 2020, you can see that from January down till the end of April, the price of oil fell by almost 70%. And at one point, the Americans quoted that it was actually a negative price, so it wasn't worth oil companies actually getting it out of the ground because they would have made a loss on it. Since then, the oil price has recovered, but we're still ending the year almost 40% lower than what we were as we went into 2020. Clearly in 2021, if the vaccine's a success and people start travelling more, people start purchasing more goods, doing more trade, then this oil price will increase. Look back to the UK being a negative market this year. There's a lot of big oil companies on there, BP and Shell, for example. You would expect their share price to rise if the oil price rises. So again, not more reasons as to why 2021 could be a positive year. Earlier in the presentation, we explained that one way of kind of keeping an eye on how international investors are looking at our economy is our currency and how it fares against other currencies around the world. So we've always said that with Brexit, if a Brexit deal was looking likely, that the pound would strengthen. So you can see in this graph here that the pound is strengthening against the dollar this year. The vaccine becoming more prevalent and more widespread and being a success basically will see the dollar weaken as well, because the dollar is the go-to currency when the world is in a bad situation because it's regarded as the safest currency around. So the dollar will typically strengthen during that period. So if you look at the pound against the dollar here going back to September, you can see there was some swings down, but then largely it's gone up since. We're now at around about $1.35. At the beginning of the crisis in February into March, it was much lower than the $1.27 you see there. After the Brexit vote was first announced in 2016, the pound crashed against all major currencies around the world, and it was seen that it was in our country's interest to have a weak pound because our exports would be cheaper. That's not a good long-term position to be in. So the pound strengthening right now is seen as a positive indication that our economy is doing okay, that we are going to get a good Brexit deal, and the virus is going to be overcome and the vaccine becomes more widespread. So just an update to give a message of thanks to all of our clients who donated over the last 12 months for my 20 for 20 half marathon challenge for the Bringing Back a Smile charity. As you know, the Bringing Back a Smile charity was aiming to raise £30,000 to buy a caravan for the families of those sick and terminally ill children who may need to use it during some quite horrific periods in their lives, to have the ability to go away and have a holiday somewhere nice. I'm pleased to say that I've now completed the 20 runs, did it at the weekend, just finished. There's a video below that gives a more thorough update on that. Wealth of advice and my friends and family, everyone who knew me seems to have donated, and we've getting £5,200 which goes towards that charity challenge. So thank you for that. It's been much appreciated, and I promise I won't be asking again for any more donations for the foreseeable future. So thank you.